Imagine waking up one morning to discover that the money in your bank account doesn't technically exist. It's not backed by gold, silver, or anything tangible, only by trust. A system that runs the global economy, built not on truth or wealth, but on belief. It's a fragile spell that works perfectly until the moment people stop believing. This is the hidden story of how our financial system survives on lies, loans, and confidence. It's a story of invention and illusion, of brilliant minds who created a machine that could make money appear out of nothing, and of generations of politicians, bankers, and citizens who became trapped inside it. Our story begins not on Wall Street, but in 17th century Europe. England, at war with France, was broke. The crown needed money, but there wasn't enough gold to pay for armies or ships. So the government made a revolutionary deal with wealthy merchants. They would lend money to the crown in exchange for a steady stream of interest payments, backed not by gold, but by the government's promise to tax future citizens. This deal birthed something extraordinary: the Bank of England, founded in 1694. It was the first time in history that money could be created from a promise. It no longer had to exist in vaults. It could exist as an IOU debt that others agreed to believe in. This idea spread fast across Europe. France followed, the Dutch perfected it, and by the time America declared independence, the concept of national debt had become the engine of modern nations. Debt was no longer a failure, it was power. Empires discovered that as long as people trusted their promises, they could expand infinitely. Money became paper, paper became confidence, and confidence became everything. Fast forward 2 centuries, the world had entered the industrial age. Banks multiplied, credit expanded, and the illusion deepened. But one event cemented the New World Order, the creation of central banks as the ultimate arbiters of money. In 1913, the Federal Reserve System was born in the United States. It was designed to stabilize the economy, but its real power was hidden in its design: the ability to create money through debt. When banks give out loans, they don't move cash from one pile to another. They simply create new money in your account, backed by nothing but the promise that you'll pay it back. That's the magic trick of fractional reserve banking, a system where every dollar in existence is someone else's debt. But this illusion has a catch: if everyone repaid their loans tomorrow, there would be no money left in the world. The system doesn't just rely on borrowing, it depends on it. More debt means more money. Less debt means contraction, recession, or collapse. By the mid-20th century, after 2 world wars, the global economy was running almost entirely on this faith-based system. In 1944, world leaders met in Bretton Woods, New Hampshire, to design a global financial order. The US dollar would become the anchor backed by gold, while every other currency would be pegged to it. The world agreed to trust the dollar. But even that link to gold wouldn't last. In 1971, President Richard Nixon shocked the world. He ended the gold standard, severing the final tie between paper money and tangible value. From that moment on, the dollar was backed by nothing but government decree, what economists call fiat currency. Money became pure confidence, a story that only worked as long as everyone believed in it. At first, the system seemed unstoppable. Credit cards, mortgage, stock markets, and consumer lending exploded. The illusion created wealth, growth, and comfort. People could buy houses, governments could fund wars, and corporations could expand beyond reason. But beneath the surface, the system had changed forever. Without any limit like gold, money could now be created infinitely. Debt soared, and inflation became the quiet tax nobody voted for. The financial system had evolved into a confidence game, one where every crisis could be solved by printing more money and issuing more debt. Every illusion eventually meets reality. And when confidence falters, the results are catastrophic. In 2008, the global financial system nearly collapsed. Banks had built mountains of debt on top of fragile assets, selling toxic mortgages disguised as safe investments. When the truth came out, confidence evaporated almost overnight. Within weeks, banks stopped lending, money froze, and the illusion shattered. Governments and central banks stepped in to perform their most powerful ritual. They printed money on a scale the world had never seen. The Federal Reserve alone created over $4 trillion to rescue the system. It worked temporarily. The stock market recovered, banks survived, but the message was clear: the system didn't heal. It was simply inflated back to life. Confidence was restored not by truth, but by another layer of lies and loans. Today, global debt has surpassed $315 trillion, 3 times the size of the entire world economy. Governments owe, corporations owe, households owe. Every nation on earth is a debtor in the same global pyramid of promises. And yet, markets keep rising, currencies keep flowing, and people keep spending. Why? Because the system still runs on confidence. Every digital dollar, euro, or yen in your account is someone else's liability, a promise that tomorrow will be fine. But here's the paradox. Debt has become both the fuel and the fire. If we stop borrowing, the system dies. If we borrow too much, it explodes. We've built an economy that must keep expanding just to survive a financial shark that has to keep swimming or suffocate. Meanwhile, the wealth gap widens. The rich own the debt. The rest owe it. The illusion rewards those who print and punishes those who believe. And yet, the illusion holds not because it's fair or stable, but because everyone, from citizens to banks to governments, has no alternative. If belief dies, the system dies with it. So what does this all mean? Money is not wealth, it's debt. Every dollar in circulation exists because someone, somewhere, owes it. The moment we stop borrowing, the illusion begins to fade. Confidence is the real currency. Our financial system doesn't need gold or silver, it needs faith. As long as people trust the promises, the system survives. When they don't, collapse follows. Lies are not mistakes, they're the architecture. From governments overspending to banks creating credit from thin air, the system was designed to survive on illusion. Truth isn't profitable. Debt is. The modern financial system is the greatest magic trick humanity has ever pulled off. It can create infinite money without infinite resources and convince billions that paper and pixels equal power. But every illusion has an expiration date. Confidence can vanish in a moment, and when it does, the system that runs our lives can disappear just as quickly. The question isn't if it will happen, but when. Because in the end, the financial system doesn't survive on truth. It survives on lies, loans, and confidence. If this video gave you a new perspective on how money truly works, hit subscribe to MoneyMathDecamontry. Join us as we uncover the systems that shape your wealth, your future, and the world itself.